So the big question on everyone's lips is, how is it possible that we now have an everything bubble? Let me explain what that means. We've got the Dow at a record, the S&P at a record, the nasdaq at a record, gold at a record, the nikkei at a record, the DAX at a record, house prices at a record. Yet we have the highest interest rates in 22 years. We also have the highest inflation in about 30 years, right? So how is it possible that everything is going up through the roof, all the asset classes, yet we have the most restrictive financial restrictions and QT as well? Let me remind you as well, quantitative tightening. So let's go through this. The last time this happened was 2021. 2021 was also the record for all the stock markets. It was a record for gold. It was a record for everything. Yet, one major difference. Well, a few major. Interest rates were zero. We had zero interest rates policy. And we also had no inflation. And as a third thing, we also had a massive rebound from the pandemic. So those were good factors that you would say, supported everything going up. But yet in 2022, we had a 20% correction in stock markets. Everything went down. And it seemed like things were getting back to normal. But as interest rates went up through the roof, expected to crash everything, nothing seemed to happen in stocks. They kind of hovered doing nothing. And as interest rates stayed high and inflation remained sticky, and that is what it's remained, we've seen all these assets go through the roof. In fact, I would like you to go and see the gold chart, because that for me is the most interesting. Gold in, I think, January something 15th of this year was $2,000 an ounce. It is now 225, right? $2,250. That's 13% increase in about 2.5 months. That's very big moves in gold, which is generally doesn't really do much anywhere up or down. A 13%, it's like this. 13, that's more than the nasdaq, it's more than the S&P. It is in 2.5 months. That is really, really high. And again, the worrying thing with all these records is there's been no up and down. Normally it'll go up and then it'll go down a bit and it'll go up and it'll correct a bit. No, all of them are just straight up with no corrections. Maybe one little correction day per week, but generally straight up, which is very, very weird. So why is this happening, basically? How can we compare 2021 when we had zero interest rates, zero inflation, to now highest interest rates, highest inflation in a generation, and yet everything is a record? So one will tell you, the positive case. Well, not the positive case. Let's go with bull and bear. The bull will tell you it's going to keep going. Why? Because everything is so good? No. Because we have massive inflation. 80% of all dollars in circulation were printed between 2020 and 2021. 80%. We also increased the government debt through the roof. The Fed has now 9 trillion, had at its peak, 9 trillion worth of assets. Now it's about 8 trillion. And it's just printing craziness. We have in the RRP, the reverse repo, still 400 billion, still there, waiting to come out, flush into assets, waiting to pump assets even higher. So there is no end. We've created a high, it's not hyperinflation, but it's a high inflation environment. Now, you're going to go, yeah, but I look at the statistics and core PCE went down and CPI went down. And yeah, none of these include assets. None of them include house prices. None of them include asset prices. None of them include gold. None of them include the things, not the price of your yogurt or the price of electricity. It doesn't include assets. And so therefore, it's a lying statistic. We are the USSR now. I saw an article in the Telegraph saying we are literally the USSR. You cannot believe a word of these statistics. They are lying. And I'm going to say even the CPI stats, which measures the cost of a yogurt and the cost of electricity, is lying. Because anyone who's gone to the grocery store knows it's still going up. It's still going up much ruthlessly. To say it's only 3% is an abject lie. And so, yeah, inflation is rampant. I could just see the price of basic, like a burger or something. It's just a burger used to be like the most basic thing. You used to go to a restaurant and be the cheapest item on there. And if you got nothing else, steak, no, I don't know. The chicken, I don't know. Oh, burger, right? It's nice and cheap, mate. Burgers now, it's like a honey. Do you want to go out for an anniversary for a burger and chips? I mean, it's that mad. People are complaining about the McDonald's meals being $20 for a couple, which is mad. Yeah, things have gone up crazily, and obviously they're not included. So we have a very high inflation environment. That's why these asset prices are going up. How do I know this? Let's take property prices based on gold, or the dollar, or S&P based on gold. If you do that, you realize that property is actually undervalued, and the S&P is nowhere near, it's pretty much on its average. It's not straying far from its average at all. Obviously, because gold is going up, so obviously the S&P is actually going up less. So it's like this. So yeah, based on gold, which is the only thing you cannot inflate and is real money, it's been highly manipulated as well. Let me tell you, even they've manipulated it using paper gold, and the London bullion gold market. Even with their manipulation, they still can't get away with it so much. So that's it. So if we look at it on a gold-based view, asset prices are not extremely high. If we look at it on fiat currency view, dollars, yes, these things are going up, and oh my gosh, they've got to crash. No, they do not have to crash at all. And so, in my opinion, I'm with the bull case, and I think it can keep going high. Bitcoin, I forgot to include, obviously broke its record at $75,000. It went down a bit, I think. And I don't own any. Stupidly. And I recommend, if you could, you should. But yeah, I think I could see it breaking 150,000 this year for sure, because the fiat money, it's coming to an end now. We are going through the hyperinflation stage. This is what happened in Germany. They printed a lot of money in 1923, very similar time scales as now, 100 years ago. They basically printed a lot of money from 1923 to 1926, and only then we started seeing the hyperinflation come in by the end of the 20s and then into the 30s. That's how it worked then. So it takes a long while to get in. And that is what's happening now. So these asset prices will go up. The bear case, it's a weak case. The bear case is, oh, these are highly inflated. Oh, they're built on, AI rubbish, and they will come crashing down. That is true. I think there could be a little correction. I think those AI stocks are well overbought, Nvidia and things like that. Where's the profit coming from them? Tesla still clearly will never make the profits it's being planned to have been making. It's finished. It's a commodity, Tesla, and will have to compete with BYD, and has no chance of competing with BYD. So why is their valuation still so high? Apple as well. All of them. I just don't see where those future earnings are coming in for those companies. Some of them, though, I do. Google, Microsoft, Facebook, I do see that because they're monopolies. So monopolies, I clearly do see them doing well. But anyone with competition, even from the Magnificent Seven, I can't see that happening. But yeah, so my opinion is it's going to keep going up. We are in a hyperinflation environment, not hyper, a high inflation environment. It's covered up. It's lied to. You're lied to with fake statistics. Your wage is being destroyed, as it has been for the last 40 years. Again, covered up. And yeah, as someone said, an amazing thing. In 1913, the year of the Fed was set up, in 1913, the average wage was $7,000, or $9,000. And that was pegged to gold at the time. That bought you 217 ounces of silver. Gold, 217 ounces of gold. The average wage now in the US is about $55,000, $60,000, right? What can that get you in gold? It can get you, let's do the calculation here, 10, 20, 30, 32 ounces of gold. There's your difference. If we took the average wage then of 217, it would be $500,000 would be the equivalent nowadays. That would be the average wage. So where has that gone? Where has that money gone? It's obviously gone to the extremely wealthy. The 1% have taken that 500,000, they've scooped it all up, and they've left you with 50,000. And that's why you have to have two parents working now, and even then they were living paycheck to paycheck. The government has to subsidize half the country and has to basically take on debt and print more money because there's no tax coming in, because there is no one to tax. So, yeah, we are entering the hyperinflation environment. It's going to get worse.